Hi, Emlyn here, and looking forward to running you through a very simple but incredibly effective investment come trading strategy. This strategy is so effective for three main reasons. The first one is it's simple, and that's one of the reasons why I wanted to introduce you all to it, because it's something that anyone can grasp in a couple of minutes. And simple strategies are often the best, and you don't need to over-engineer things to make them work. That's where mistakes happen. This works. It is simple. Now, the second reason why this is so fantastic is it's mechanical. It removes emotion, and emotion is the Achilles heel of 90% of traders. And this is fantastic because it's so rigid, it's so simple that you know where the entry points are, you know where the stop points are, and you know where the take profit points are. Very, very simple. And when you remove emotion, you remove mistakes, a lot of them. So that's the second reason. And the third one is it just works, which is fantastic. We all want a strategy that works. Nothing is foolproof. This isn't foolproof, but it does work, and it's a very good percentage win rate. Now, so what is the strategy? Well, the strategy is to find days where you have higher lows and lower highs than the previous day. And then we build on it from there. Now, what we're looking at here is a daily chart in Apple. This strategy works on daily charts. So you don't want to do it for intraday, you don't want to do it for weekly or longer periods. You're looking at a daily chart, you're looking at a trade that will last up to a maximum of about 3 days. So it's a very short-term trading strategy that we're looking at here, which is good for the nervous investor. Look for take your cash out. You're not exposed to the market for a long period of time. So high lows, lower highs. Looking at 3 months, if we just run through very quickly, these things on a candlestick chart jump out to you very, very quickly. Here's one here: higher low, lower high than the previous day, the day before. You just run along here. No, 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 no. Yes, here's one. So it's had quite a period. Normally you get them, quite often. Looking through again. No, no, no. Yes, and yes. So they're generally pretty obvious. Obviously, I'm going through it. Here's one. Yep. Very quickly. So now here's one where you've got a higher low, but still a higher high. So again, it fails. Looking through. No, no. Yes, yes, no, no, and we've finished on the day. Today is actually one. So, and I'm sure I've missed a few as I've gone through, but you get the idea. You're looking for a higher low, lower high. That's rule number one here. Now, this works on any asset class. I'm looking at Apple here and the stocks, but it works just fine in FX, commodities, bonds, whatever. So, not a problem. So if you've got a particular asset class that you like, then you can apply the strategy to that. Now, as I said, you're looking for a higher low and a lower high than the day before. Rule number one. Rule number two is that you're trying to find a range when you find one, and we'll just pick this day here, that is 50% in terms of the actual range of that higher low, lower high than the day before. If it's bigger than that, then again we chuck out. It's not effective and it's not what we want to do. So there's one, here's one probably around 50%, here's one around 50%. But if you jump over, here's one here where you've got one that's probably 75 to 80% of the day before. Again, it doesn't meet our criteria. So rule number two, 50% or less than the day before's range. Okay, now what's actually happening here is that you've got buyers and sellers hitting each other, building positions, but no one's winning. So pressure is building. And what we want to do is take advantage of that pressure. So you can think of it like a bottle of champagne. Someone's shaking it up, the pressure's building, the cork hasn't been released yet, and chances are the next day the cork's going to get released. Yeah, here, and again it's going to move. We don't know which way it's going to go. All we know is that we want to stick our glass out and soak up some of that champagne when it starts flowing. And that's exactly what we're trying to do here. So again, you've got the day and you get the burst out. You don't know whether it's going to be down or up, but we want to be there to take advantage of it. So 2 rules: higher lows, lower highs, range 50% or less, and you want to do a daily chart. So this is the first video just to set you up on what the strategy to starting is. The next video we'll look at the entry points, the stop losses, and take profit points. And again, as I said, very mechanical, very simple. Hope you've enjoyed the first video and look forward to seeing you in the next one.